just be here for a little while and then we'll just step out quietly.
Yeah, thank you. My name is Hani Ahmed. I'm course director of Fintech. So I would like to welcome all of you. Many thanks for coming today. So you can present yourself if you want.
So I'm Piyush. I represent the company Admit Card. We are here from India. Just looking to learn a bit more about Coventry University and what all are the facilities available here for international students.
So I'm just starting the session right now. In the first 30 minutes, we are going to use Bloomberg platform to understand better how the good type of bond portfolio, especially in bond market,
Okay.
right? Bond price, bond portfolio, and I'm going to explain different characteristics to the bond market, especially when we deal with trading on bond market as a financial instruments in the secondary market.
We'll just be here for a little while and then we'll just step out quietly,
Yes.
not wanting to disturb the class.
If you are planning to study in the UK, watch the video until the end and subscribe to the channel.
Good afternoon, everyone. Warm welcome to all of you, and thank you so much for the guest
Piyush.
yes today. I'm more than happy to start first the session by presenting that this module, bond market analysis using Bloomberg in particular, is a practical module, whereas we explore bond portfolios, bond characteristics, bond risk in practice using Bloomberg. This is a special room, whereas we are doing simulation in the capital markets, how to make trading, how to understand investment portfolios, and in some modules beyond this one, we use the terminals to understand equity valuation, real estate options, commodities, risk management, coding programs for AI techniques. So we utilize many different learning outcomes using these facilities, whereas students get benefits from play again these type of sessions, listening one more time to the key valuable insights from the learning outcomes, do more practice. So we are using different techniques. On top of that, we provide some links that powered by AI. Why? To boost our students' performance in learning in different courses like Semantic Scholar powered by AI, Gemini Pro powered by Google, etc. Beyond that, we also provide our students with a full list of academic journals, full subscription to top journals, whereas enrich our students with the academic writing, latest research. The university does a good investment by providing full access to such top journals. Everything access to these journals might cost the university a lot of money in the budget. So I'm going to shift right now into practice, especially how we can apply the learning outcomes on the topic of interest this week, how we can apply the concept that we did learn this week in the lectures using Bloomberg. It means how we can use Bloomberg for practice and simulation. Okay. So every student can use Bloomberg terminal by using the email address, right? Getting a full access to Bloomberg. So the main menu of Bloomberg functions covers different asset classes in the capital market: sovereign debt, credit, mortgage, equities market, different indexes, commodities, derivatives, risk management. So every section here exactly in a live streaming with the Bloomberg. Take an example like exploring the sovereign debt, live trading, cross country, whereas we understand better the bond portfolio in cross country. In the last few sessions, we did explore that in the bond portfolio, based on time to maturity, like short-term investment, medium-term investment, long-term investment. Once we change this type of duration, then we can get live trading information. Whereas we have cross-country, if we are interested in a particular market like US, to understand better governmental bonds, as you did learn in theory from last week, a number of theories explain why bond yields might be affected by market expectations about the interest rate sensitivity. Okay, market expectations about the forward rate next year, about the liquidity on the bond portfolios. Okay, so some theories explain why this volatility in the bond yield affecting the price. If you consider the relation between bond yield, which is the required return for investors on the bond portfolio, and interest rate, we'll find that there is a relation between both of them. See how the range of volatility for 1 year, right? How the volatility of the yield curve for this specific bond issued by US government. So we have this type of graph, whereas to understand the lower band of yield and the higher band, and between us we can find the median level of the yield. Okay. This also consolidate what you did learn yesterday in the session, that when you use binomial interest rate tree, how you can consider the lower band of interest rate to estimate the higher band of interest rate for 1 year ahead forward, giving random walk formula that exactly link it to binomial tree, how we can estimate the lower band and higher band of interest rate within 1 year ahead, based on a number of risk factors. These type of risk factors, as you know, could be linked to bond liquidity, bond characteristics, geopolitical risks, violation of the interest rate. You follow the news, right? Media news or any type of announcement in the capital market, like in fixed income, being core now for any portfolio manager, right? So active portfolio managers can alter the portfolio weight or portfolio position based on the information, based on the news, according to market efficiency. Any news coming up in the fixed income security bonds will drive the yield required return to investors up or down. Like geopolitical risk increases nowadays. So what will happen, as you know, higher risk what will happen? Investors will require more risk premium. Credit risk for bonds issuers will be affected. Some of them will be upgraded to, for example, from A to A+. Some of them will be downgraded from A to A-. So I can notice like these one of risk factors. So what I'm saying is, following the news on fixed income securities now is very important, whereas this type of media news posted in any open source might affect the yield, which is by definition is the required return to investors. For example, now, what is the required return to investors nowadays in the US? We consider 10 years bond. What is the, at the moment, as you have noticed from the graph, 3 point, if I get back to the graph, 3.8. Now, would you expect the bond yield to be higher in the forthcoming quarter or 12 months or not. You consider the yield to be higher or lower. From your best understanding from, for example, the news about geopolitical risk, about volatility, about shortage, about liquidity of the bond, about the federal banks like Fed US. And now there is a 50 basis point cut by December in the forthcoming meeting to cut interest rate according to inflation measures. What do you expect in 3 months?
Yeah.
Thank you so much.
Thank you.
Thank you very much.
Hopefully you've got what you wanted.
Yes, I think we've got everything. So we'll just probably just walk around, maybe find some students and just chat up with them.
Okay.
So, yeah. But I think we covered everything that was there on program.
Yeah, I mean, obviously you've seen when you go, if you go over by the hub is where you're going to find the most students.
If you found this useful, make sure you like, share, and subscribe to the channel.